And welcome back again to my YouTube channel. And for today's video, video lessons of fundamentals of accounting, I'm going to discuss to you what is journalizing in accounting. So I hope you are okay in there. Thank you for always supporting my YouTube channel, and thank you for your listening to our video lessons. Please listen to this topic because this is very important in fundamentals of accounting on how to journalize your transactions. So again, I would like to welcome you, and I hope you will okay, just sit down and relax and listen to me, because at the end of this video lesson I have something question that you need to answer. Okay. Alright, so journalizing. Journalizing class is a journalizing transaction is a very crucial first step in accounting cycle. Journal entries serve as the building blocks for your financial records. So it is very important to stay on top of them. All your business transactions include payments from your clients and purchases that you made of your business, you make for your business, you have to journalize. So what is journalizing in accounting? Journalizing is in accounting is the system by which all business transactions are recorded for your financial records. A business transactions is the first recorded in journal, also called a book of original entry. Your journal keeps a record of all your business transactions, tracking them in chronological order as they happen. Adding new journal entries is called journalizing. So the process of journalizing starts whenever a business transaction occurs. Then let us say, for example, your client pays in an invoice. You'd want to record that payment as journal entries to log the transaction. Each journal entry typically records the date, the account you're debiting or crediting, and a brief description of transaction that is occurred. So there are types of journals class. So actually, there are 7 common types of journal, but for the beginners or freelancers and solopreneurs, you're probably focused on some of 4 journal types outlined. So we're going to discuss only 4 types of very important journal types in accounting. The first one is the so-called sales journal. So sales journal records credit sales related to your business. When a client pays an invoice by credit, you record it in your journal as sales journal. Purchase journal records credit purchases you make to your business, such as office supplies to stock on your desk or software for your work like computer. So number 3 is cash receipts journal. Records all the cash flowing into your business, including cash payments you receive from your clients. Cash payments journal. So this journal records all cash flowing out of your business. If you paid for parking or your way to business meeting using cash, you record it here as cash payment journal. The transaction entered into journals are later transferred to your general ledger. So what is the difference between a journal and the general ledger? That is a question. Think of journals as record that shows all the financial details of your business. A general ledger, in the other hand, it is a master document that offers less details. Instead, it gives a big picture view of your financials. So there is a so-called single versus double entry accounting. There are two main approaches to accounting for small businesses. The first is single entry accounting. It is the most basic accounting method. In single entry accounting, every transaction is journalized as a single transaction. As freelancers, the single entry method might be all you need. But if you're willing to put a bit more work into your bookkeeping, double entry bookkeeping can pay off in the long run by making it easier to prepare financial statements. Double entry bookkeeping means that for every journal, every entry you make in account, you must make an opposite entry in different account. Every debit on one account is balanced by credit to another account. So what is the fundamental accounting equations? So previous video we have already discussed this, the fundamental equation. So I let you remember again that asset is equals to liability plus owner's equity. So the fundamental accounting equation is foundation of double book entry bookkeeping transaction. So this is the double entry bookkeeping. The fundamental accounting equation is asset equals to liabilities plus owner's equity. The purpose of using the double entry accounting method is to make sure you are balancing the fundamental accounting equation. In the sum of your debits, it is ever not equal to the sum of your credits, so the equation is not balanced. So this is very crucial, a big problem if you do not balance your financial statement. Fundamental accounting equation example, if you paid 500 pesos cash towards your office rent, you would debit this as expense and credit cash in your journal. So journalizing transaction, a step-by-step guide. Journalizing involves recording business transaction to keep an accounting record using the double entry accounting method. So this is the 4. Number 1, step-by-step guide. Number 1 is to classify business transaction by account. This is very important for you class as a beginners to understand what are the transaction in your business. So for you to classify the different business transaction by account. Take a look of each business transaction and classify it by type of transaction. There will be new types of accounts involved each transaction. One account will be debited and one account will be credited. Second, determine the account type that's involved. There are different types of account that can be included in a journal entry, and it is very important to identify the correct account type when using double entry bookkeeping. The type of accounts normally used by self-employed workers include assets, liability, expense, and revenue. So, number 3 is apply the fundamental accounting equation to the transaction. So, after classifying, after separating the transactions, so this is the time that you are going to apply the fundamentals of accounting equations. So remember, the essential fact of basic accounting equation, your financial transaction must always be balanced with the sum of your debits and always equal to the sum of your credits. So you'll want to ensure that every time you debit one account, you always credit the corresponding account. And the last one is journalize the transaction. So after identifying, after classifying, So after determining your type of account transaction, use the fundamental, and the next one is now to journalize the transaction. So from the simple journalizing class, these records can be used during posting your general ledger with the description of what that kind of transaction that is being recorded with debit or credit. Then it should be has the so-called description. What is that kind of transaction you made into your journal entries? So that is very important for you to familiarize. Again, so that is journalizing. The first step in accounting, the very crucial step in accounting cycle. Journal entries. They serve as the building blocks for your financial records. I hope you have learned something from our video lesson for today about journalizing. But before I end our video lessons, I would like you to answer this question. What is the difference between what's the difference between a journal and a general ledger? Please let me know your answer by commenting down your answer below on the comment section. And please include your name and section for me to identify who has the correct answer for me to record your grade on your class records. So I'm going to wait your answer, and for the meantime, I would like to ask you again to review and keep on studying, because fundamentals of accounting is not an easy subject. So that's it for today, and thank you for watching. This has been your teacher, Mr. Malang Bernabé, is now signing off. Goodbye, class.